Hello everyone and welcome back to TradeSmart. In today's video I am going to show you a strategy I put together based on your votes. If you don't know what I am talking about, the week before I released this video, I started to put up polls on this channel where you could vote about which indicator should I use for this strategy and for what purpose. After all the votes were in, I put together a strategy based on your votes implementing my ideas in it. First, I will show you how I make strategies like this and how you can too. Then I will show you the 100 backtests. After that, I will show you the results and give you a few improvement tips and final thoughts. If you want to see more videos like this, don't forget to like the video and comment down below what would you change or add to the rules of this strategy. Without further to say, let's get right into it. For this strategy, I wanted to keep it simple, so we are going to use one entry indicator, one trend direction indicator, and two filter indicators. Based on your votes, we are going to backtest the strategy on the 5-minute time frame on the Bitcoin USDT pair. First, let's go over the entry indicator. For entry indicator, we are going to use the well-known MACD crossover, meaning a strategy should enter into a position when the MACD's fast and slow MA line crosses over. If you have seen my other videos, you might have come across a few strategy backtests using the MACD indicator, such as the simple MACD plus 200 EMA trading strategy or our first free trading script release video. As I covered a lot of MACD strategies, I wanted to give you a new and unique MACD strategy. So first, I started going over the chart looking for clear trending moves right after we got a MACD crossover. So the first rule to creating a strategy like this is to go over the chart, mark some candles that would have been great entry points. After you got a few marks on your chart, look at your entry indicator and find correlations, similarities that can signal a nice trending move before it even happens. Following this method, I came up with this. For a long position, after the MACD has made a cross up, meaning the blue line crossed above the orange line, you wait until the next cross up. If the second cross up occurs at a higher level on the MACD indicator, we have a valid entry signal. Using this entry method, we are entering into a market that is already showing uptrending behavior. After I got my entry points, I added the trend direction indicator, which is going to be the exponential moving average. This indicator's purpose is to only allow us to enter trades in the trend's direction. The most common way to use EMAs as trend direction filters is to only go long if the price is above the EMA and only go short if the price is below the EMA. Following these rules, first I tried the most common 200 exponential moving average. I checked out a few losers and a few winning trades and saw that it filters a lot of bad signals, but I thought it could be better. So, as I could only use the EMA for trend direction, I decided to use not one, but 3 different EMAs. I am going with the 200, the 50 and the 21 EMAs. So, the second rule for making your own strategies is to get creative and try different settings with your trend direction indicator. Maybe add a second indicator and combine them. The general rule is to eliminate as much losing trades as possible while keeping the winners. I will give you an Excel cheat sheet in the description where you can see what are the break-even eliminations for winners and losers, so you can easily decide if a trend direction indicator is working in your favor or against you. Now let's move on to the third indicator, which is going to be a filter indicator. Recently, I started using different indicators which can filter bad entry points. The first thing which I wanted to filter was entering on big candles. After big one candle moves, the price tends to fall back and cover that candle, resulting in a higher probability of hitting your stop loss. This gives you a trade with a bad risk-to-reward ratio, especially when you are using a close stop loss. There are a few indicators I like to use for this purpose, which are the Bollinger Bands, the Keltner channel, and the unique indicator called candle height in percentage. For this strategy, I tried all of them and found that candle height in percentage and Keltner channel works the best. Relying on your votes, in this strategy, we are going to use the Keltner channel indicator to filter big sudden price moves. So the third rule to making a strategy like this is to find different filter indicators that can eliminate losing trades. You can filter for a lot of different conditions, but in this case, I will only filter for big sudden moves and momentum changes. The rule I came up for filtering with Keltner channel is very simple. If the entry candle closes outside of the Keltner channel, we won't enter the trade as it is an overextended candle or price movement and our stop loss is more likely to get hit. After playing around with the settings and checking how well the indicator can filter losing trades while keeping the winners, the final settings are the following: 20 length, 1.5 multiplier and a 10 ATR length. I'm sure that you can find even better settings, but for this strategy, these settings also did a great job. The fourth indicator is also a filter indicator, but this time we are going to filter for momentum changes. The general rule here is that the trend is your friend, just like momentum. To reach relatively far price targets, we need strong momentum in line with the trade's direction. For representing the momentum, we can use a lot of different indicators like the RSI, the ChandeMO, or the ADX. Out of the 4 options I gave you, you choose the RSI as our momentum filter indicator, so we are going to use that one. This was a hard one, because I usually use the ChandeMO for momentum filtering. With the RSI, I had to try a few things before I got something useful out of it. But finally, I think I did came up with a good filter. The first thing I did was to add an EMA on top of the RSI indicator. In almost all cases, the EMA calculates the closing price of each candle and averages them. With this EMA, we are not using the candle closes, but the RSI values. So in each candle, the RSI value we are getting is going to be the EMA source. Usually, we are using different levels on the RSI to tell if the price is oversold or overbought. With this RSI source EMA, we can easily use the RSI indicator to tell when the momentum is shifting direction. The rule for this indicator is the following. If the RSI value is above the RSI source EMA, we can only enter into a long position because the momentum is trending up. If the RSI is under the RSI source EMA, we can only enter into a short position because the momentum is trending down. The settings are the following: 50 RSI length and 200 EMA. And now, only one thing is left, the stop loss and the take profit placement. For the stop loss and take profit, I am going with the ATR using the NNFX ATR indicator. Using ATR as your stop loss, you can decide what type of trades you want to get in. You can either choose longer term trades using bigger ATR stop losses and take profits, or shorter term trades using close ATR stop losses. Nowadays, I am more focused on quick short-term trades. So if the price doesn't move in my favor immediately, probably the entry was not that good quality one, and it's better to close the trade. To implement this type of trading, I had to use close stop losses, so low ATR values. Choosing the right stop loss, take profit levels, and risk-to-reward ratios is crucial and can have a big impact on your strategy's results. So the fifth rule for making strategies like this one is to spend a good amount of time trying out different stop loss levels and risk-to-reward ratios. First, check out what's the best stop loss level by finding good entry point and checking what ATR multiplier kept you in the trade and left a reasonable moving space. Then, try out risk-to-reward ratios. I would recommend checking anything between 1 to 1.5 and 1 to 3. And finally, if you want to spend more time improving your strategy, try using 2 or 3 step take profit targets. So let's say, after you enter the position and you hit your 1-to-1 risk-to-reward ratio, you take off 50% of your trade and let the rest ride until it's either hit your break-even stop loss or it hits 1-to-2 risk-to-reward ratio. For this strategy, as I wanted to keep it simple, I won't use any trailing stop loss or multi-level exiting. I will only go with a strict risk-to-reward ratio. So I tried out 1 to 2.5, 1 to 1.5, but I got the best results with a 1 to 2 risk-to-reward ratio. There is one extra indicator I use only for low time frame strategies, and that is the sessions indicator. This indicator shows you when the main trading session starts and closes. These sessions are the New York, the London, the Tokyo, and the Sydney sessions. In these sessions, generally, we get higher volume and volatility, because this is when corporations, funds, and big players trade. This also comes with a bigger likelihood of market manipulations, and with market manipulations, you can get your stop loss easily hit. Market manipulations can easily ruin a great trade, because big players want to touch pools of liquidity where retail traders like you and I place their stop losses, so they can enter into bigger size trades. To do that, they usually tend to manipulate prices. So if you are trading on lower time frames, check out each trading session, count the gross profit in each of those sessions. If you find a session losing you money, you can simply eliminate that session by not entering a single trade. With this strategy, I found that London sessions is not a good time to enter a trade because the strategy performs significantly worse in those time periods. And with that said, the strategy is now complete, so let me show you a long and short examples and all of the rules. First, let me show you all the indicators needed. Once you are in the Indicators tab, type in NNFX ATR and click on this one. Then search for Keltner channel and click on this built-in one. After that, type in 3 EMAs and click on this one. For the MACD, just type in MACD and click on this one. For the RSI, just type in RSI and click on Relative Strength Index. And finally, the crypto market sessions. And click on this one. Now the settings for the ATR are the following. We are going to use a 14 period, a 3 take profit and a 1.5 stop loss. The smoothing is going to be RMA. For the Keltner channel, we are going to use a 20 length, a 1.5 multiplier and a 10 ATR length. For the crypto market sessions, we are going to untick the Sydney, the Tokyo and the New York session, and we are only leaving the London session. And for the 3 EMAs, use 21, 50 and 200. The MACD settings are all the defaults. The RSI setting is going to be a 51. And to put an EMA on the RSI, go to Indicators tab and type in EMA. Click on the moving average. Once you got that one, just click on the EMA and start pulling it down until you reach the RSI. Now you can see that we have that EMA on the RSI, but this EMA still uses the closing prices as source. So double click on the EMA and click on source and go down until you find the RSI. Now click that one, and now the EMA is calculated using the RSI source. Change the length to 200 and we have our RSI indicator set up. So here are the rules for a long entry. First, you need to have the price closing above all the 3 EMAs. Second, the price needs to close inside the Keltner channel. Third, the target can't reach the 200 EMA. We are using this rule because we usually have a lot of resistance near the 200 EMA and the trade can quickly turn against you. Moving on, the fourth rule is that you need a MACD cross-up higher than the previous cross-up level. And fifth, the RSI indicator must be above the 200 RSI source EMA. The take profit is going to be at a 3 times ATR with a 1 to 2 risk to reward ratio, and the stop loss is going to be at 1.5 times ATR. Now let's see an example. Here you can see that we get a MACD cross-up. Now what we need to see is a cross down and then a cross back up at a higher level than the previous cross-up. As you can see, I drew a red line to mark this cross-up level. And now let's find the next cross-up. If we move on, you can see that on this candle we had a cross down, but just right after that we get a nice cross-up. So this cross-ups level is definitely higher than the previous one. Now we just need to check for the other indicators if we have all the other conditions met. The second condition is that we need to see the price closing above all the 3 EMAs. And as you can see on the cross-up candle, we had a close above all those EMAs. Now take a look down on your RSI. As you can see on this MACD cross-up, the RSI was above the 200 EMA, so the entry is still valid. One last thing we need to check is the Keltner channel. These yellow lines are the Keltner channel, and the rule says that we need to close inside the Keltner channel for a valid long entry. As you can see, the price closed inside the Keltner channel, so this is a valid entry. And besides that, we are not in the London session. And now for the stop loss, we are targeting the NNFX ATR indicator, which uses a 1.5 ATR multiplier, and our take profit is going to be a 3 times ATR. As you can see, this trade was a winner. Now let's see a short example. Here are the rules for a short entry. For a short entry, the price has to close under all the 3 EMAs. The price can't be outside the Keltner channel. The target can't reach the 200 EMA. The MACD needs to cross down on a lower level than the previous cross down. And finally, the RSI indicator must be under the 200 RSI source EMA. The take profit and the stop loss placement are going to be the same. Now let's see an example. Here you can see that we get a cross down on the MACD, so I'm going to mark that level. After that, we get a cross up right here, and then we get a second cross down right on this candle. So if you compare the first cross down level and the second cross down level, you can see that the second one is lower than the first one. So this condition is met for the entry. Now we need to check if all or other conditions met on this candle. First, as you can see, the price closed under all of the 3 EMAs. And if you take a look down on the RSI, you can see that the RSI is under the 200 RSI source EMA. Now let's see the Keltner channel. As you can see, the price has closed inside the Keltner channel, so the entry is still valid. And one thing left, to check for the crypto market sessions. And as you can see, here is the London session, so we are outside of the London session. That means we have a valid short entry. Now let's see our stop loss and take profit placement. Using the NNFX ATR indicator, we are going to place our stop loss at this 1.5 times ATR level, and we are placing our take profit at the 3 times ATR level right here. As you can see, the target is not touching the 200 EMA, so this is going to be a valid short entry. And this trade was a winner. And now let's see the 100 backtest. And the results are in. After 100 trades on the Bitcoin USDT pair using the 5-minute time frame with a risk-to-reward ratio of 1:2, we had 46 winners and 54 losses. That brings us to a 38% gain on the account, risking 1% per trade. But if we would have risked 3% per trade, the strategy would have made a 114% gain on the account over 100 trades. Now these results might seem pretty great, but never forget that after 100 trades, you can say that a strategy is profitable for the long term. Always do your research before investing in the markets, and this is not financial advice. Now let's take a look at the equity curve. Taking a look at the equity curve, you can see that we have a very nice uptrending movement. Right from the beginning, we encountered a big winning streak, followed by a sideways price action, then another bigger uptrend movement, and after that, just trending upwards until the end. I would say that this equity curve is pretty good. I would give it around 4 out of 5. This is most likely could be improved by adding more filter indicators and optimizing the strategy. To improve this strategy, I would recommend you try multiple take profit methods, like partial take profits. So let's say, for example, you take out 50% at 1:1 risk to reward ratio, and then taking the other 50% out at 1:2. Or you can try trading stop losses too. I would also recommend adding a second entry confirmation indicator to get more accurate entries. Thanks to all who have participated in the polls. If you want to see more community voted strategies like this, comment down below what should I test next, drop a like and let me know what indicators would you like to see in the next community voted strategy. Until then, have an amazing day and see you in the next video.